If you own commercial property, one building or a whole portfolio, your insurance needs look meaningfully different than what a business that simply operates out of a space requires. You have tenants, you have lenders, you have third parties on your property every day, and you have asset values that need to be protected with precision, not a rough estimate from a few years ago. In this video, the core insurance structure every commercial property owner needs and the gaps that show up most often. I'm Brian Woods with Integrity Insurance and Risk Management. We work with business owners, commercial real estate investors, and independent producers who are serious about protecting what they've built. On this channel, we break down insurance and risk management in plain language. No jargon, no fluff, just the stuff that actually matters when something goes wrong. Commercial property coverage protects the physical asset, the building, permanent improvements, and the systems inside it. The starting point is making sure the limit actually reflects what it would cost to rebuild the property today. In Florida, this is a live issue. Construction costs have increased significantly over the last several years. A property that was properly valued in 2019 or 2020 may be meaningfully underinsured today without anyone realizing it because the policy just renews at the same limit year after year. The coverage form matters too. A special form policy covers all causes of loss except those specifically excluded. Think of it as a broad net. A basic or broad form only covers the specific events listed. For Florida commercial property, understanding what's covered and what's excluded, particularly around wind, is essential. Two risks in Florida require specific, separate attention. Wind. For properties in coastal counties or high wind zones, windstorm coverage may need to come from a separate policy, often through what's called the surplus market, which means non-standard carriers who specialize in higher risk placements. The wind deductible is typically not a fixed dollar amount. It's a percentage of the insured value, often 2 to 5%. On a $2 million building, a 5% wind deductible is $100,000 out of your pocket before coverage begins. This needs to be a deliberate decision, not a surprise. Flood. Flood is excluded from virtually every standard commercial property policy. It requires a completely separate policy. Even properties outside designated high-risk flood zones can sustain serious flood losses in Florida. If you own commercial property here and don't have flood coverage, you're self-insuring for that exposure. Real quick, if you're finding this useful, subscribe to the channel. We put out new content every week on commercial insurance, risk management, real estate protection, and business liability, all in plain language. It's free, and it'll save you from learning these lessons the hard way. Even when your tenants carry their own general liability, you carry liability exposure as the property owner that exists separate from anything your tenants have. Slip and fall incidents in common areas, structural issues affecting a tenant or a visitor, negligent maintenance claims. These are all premises liability exposures that fall to the property owner, and your general liability policy needs to be sized for the number of locations, the type of tenancy, and the volume of third-party traffic the property generates. When a covered loss forces your tenants out or makes the building uninhabitable, rent stops. But your mortgage, property taxes, insurance premiums, and other obligations don't. Loss of rent coverage replaces the rental income you lose during the restoration period. The limit should reflect actual current rent rolls, not what a property was generating years ago. And the coverage period should account for realistic Florida reconstruction timelines after a serious storm event. Property owners with multiple locations, meaningful total asset values, or active development activity should carry excess liability limits above their primary coverage. The premises liability litigation environment in Florida is active. Carrying a 5 or $10 million umbrella is basic risk management for commercial property investor with a real estate portfolio. If this was helpful, share it with a business owner or an investor who needs to hear it. And subscribe if you haven't already. New content every week. If you own commercial property in Florida and want to make sure your coverage is structured for the risk you're actually carrying, wind, flood, liability, rental income, reach out to Integrity Insurance and Risk Management. The link is in the description. I'm Brian Woods with Integrity Insurance and Risk Management. We'll see you in the next one.